Hello, everybody. Welcome to the Trading with Ashley show. You know, they always tell you to put your money where your mouth is. Well, I did just that today. Right before market closed, I placed a $1 million trade on Palantir, and right after close, I got the results. They did incredibly well. They had their first $1 billion quarter. And of course, the stock is surging on such exciting news. Palantir has just been an amazing opportunity for me personally. And although I was frustrated working in corporate America, it actually taught me a lot about what Palantir does. And I saw how many analysts it took to do the work that Palantir can now do with literally the touch of a button. So it makes this company so incredibly valuable. And I fully understand what they do for businesses and why they are so valuable to companies that are using them. Alex Karp just shared that they are at the point where they might have to start turning away customers. So you know that it is in demand when that is the situation. And he is so entertaining. He said, let them read them and weep. So we are going to take a quick look at the shareholder letter, and then I am going to show you the trade that I made. And I shared it with my community. We put on some smaller trades within the community, and they all are going to be smiling very big tomorrow because all of these should be in great profit. I encourage all of you that are interested in a company to study up on the company and go to their website, and you can go to their investors relations page and see all the information that they are offering to shareholders. So this is the letter that was put out today, and here you see the stair-stepping revenue that they have seen each quarter, and finally they are at the $1 billion mark. Such an accomplishment. And then if you look at the quarterly revenue growth, they're up 48%. And the commercial business is something that they talk about quite a bit. The commercial business is where they are seeing so much growth that now they are going to have to start cherry picking the companies that they work with. And then, of course, Alex always offers some very interesting little perspective down here as you read his letters. Let's go take a look at this $1 million trade I placed. Before I place this trade, I definitely want to show you what I'm seeing on the technicals. So right now, we are about, looks like maybe a few hours before close, and we're at 160 on Palantir. And when I look at a trade this large, I want to make sure I'm looking at the right time frame. So I'm going to go ahead and look at the 3-month time frame. And then I want to show you what I'm seeing here. First of all, we are at the top of the Bollinger Band, and we are over 60 on the RSI, but we're not at 70, meaning there could be a little bit of room to run, especially with great earnings. But I want to make sure that if I'm assigned, it's at a very fair price. So let's look at what a fair price would be. If you look right down here at 140, it's the 50-day moving average. It's also the bottom of the Bollinger Band. So 140 would really be a fair price. But because this is such a large trade, I definitely want to make sure that I go a little bit under a fair price so that if I'm assigned, I don't have to wait long to sell calls. So let's look at what that would be. If you look at this candle formation here, you can see that it definitely had some support right here at around that 130 area. So I think what I'm going to do, I'm going to split the difference. 140 is the bottom of the band. It's also the 50-day moving average. And then there's some candle support right down here at about the 130, 128. So I think I'm going to go with 135. Let's see what that looks like as far as the deltas go, and then we will execute the trade. Here we are looking at the option chain. It's the expiration date of 8/8. And let's go look at the strike price of 135 just to get a sense for where we are. Here is the 135 strike on the sold put. It's right now paying about 130 a share. And if you look at the delta, it's 0.11. So there's only about an 11% chance that it actually lands here after earnings on Friday. And so that's good to know. It's also got a good bit of volume and open interest. I think this is a popular level. The IV should be high, and it is. Look right here, it's 1.3. And high IV is typically anything around 0.5 or higher. So obviously this is very elevated. Let's do one more thing. Let's look at the expected move so we can just get one more measure of safety. So as I'm looking at it right now, I'm looking at the 160 level. That's what it's trading at. And I want to get a real-time expected move. So I take that 9.38 and then I add it to the 160 call premium, which is 9.60. That equals 18.98. And then for one standard deviation, I multiply it by 0.85. That's going to give me $16 up or down. So if I look at that and I take 160 minus 16, it looks like it could get to about the 144 mark, and it could go lower. So I'm going to stick with that 135 at this point, and then I'm going to go ahead and take that trade. Let's go look at my available buying power. This is in my Fidelity account. My margin buying power available to me is over 3 million, and it helps that I have this cash right here of the 928,000. So that's what we're working with right there. Now let's go set up the trade. Here's the trade setup right here. It would be sell to open. This is 100 contracts. Now that would end up being 10,000 shares because you take the 100 and you multiply it by 100. So that would be 10,000 shares of Palantir. It's a put August the 8th, and it's at that 135 strike. So here are the details. The limit order is $1.30. It's paying right now anywhere between $1.30 and $1.31. And it looks like the max loss on this trade is $1.3 million. But I want you to keep in mind that would only be the case if I was assigned the shares and Palantir went to zero. We don't think that that is a strong possibility, hence it is an appropriate risk reward. This is not even using half of my available margin. It looks like the gain would be about 13,000. Now, of course, I would get out of this maybe even before the end of the week, just depending on how much the Ivy crush is. So let's go ahead and preview this order. It's giving me a little bit of the warning here, telling me it's not covered by a short position. We know that. Going to go ahead and place this order, and it filled. Here it is, 100 contacts, a Palantir at the 135 put limit, 130, and it filled at 131. Now let's go take a look at my margin. You see, I still have 2.3 million in available margin, so it barely touched it. And that's because my strike price was so low and it did not require as much margin as you would think. Now, if you want to take a look at this for yourself, you can put it in an option calculator. This one's on Fidelity. So I put it on the worksheet, sell to open 100 contracts, 135 put, and receiving 125 at this time that I'm doing the calculation. And here's what it does to the buying power. You can see right here the margin buying power has gone down by 675,000 based on the worksheet, and the cash buying power is going down by 202,000. Now, this is post the earlier trade I did. So if I were to do a second round of these, then this would be the effect on it. So margin can really help you in these situations if it is a reasonable stock price, and you're getting enough premium. Now, part of what made this trade so lucrative for me was two things. One, I went very low in strike price. I went well beyond the expected move. You know, they say knowledge is power. And so the more knowledge you have about a company, about its potential movement, about the history of how it moves after earnings, about earnings itself, the more confidently you can go into a play like I did. And I studied Palantir. I have been studying Palantir for years, and it is paying off handsomely. Now, I did not want to cap the potential upside on my buy and hold shares, so I have not touched those. I have no calls sold on my buy and hold Palantir shares. My plan was that if Palantir did pull back, I would just add to that collection of shares because, again, I think Palantir is just getting started. The other thing that helped me today with this trade was the use of margin. As you can see, when you are using margin, it doesn't take quite as much capital to make the trade. And I had plenty of available margin in case I was, in fact, put the shares. I would have been very happy with the shares at 135 had I been put those shares, because I think in short order they would be rising up again, and I would probably have even made more money than just getting that premium on high IV. And the other thing that helped me was the fact that it was earnings and we did have elevated IV. Remember, when you're an option seller, you get to collect that elevated IV instead of paying that IV. So tomorrow and in the coming days, you know, this trade does expire in just a few days. IV crush would have set in, and then I could exit the trade very gracefully and be able to keep 100% of that premium. So I hope this motivates you. I hope this piques your interest to get more involved in trading. Remember, if you're with me trading with Ashley, there is no trader left behind. Now, if you want to see a video on Palantir that I pulled out of the archives, I'm going to leave that for you. I'm going to leave it for you right here.